Hey, you guys, I'm going to talk about the categories of from AGI deductions today. So, there are three broad categories of deductions that are from AGI. Remember, that happens after AGI. So, we take them from our AGI. Sometimes people call these below the line deductions, with the line being that AGI, right? Okay, so our first category is pick one, standard or itemized. So the standard is just that set amount. Remember that Congress says each year, hey, we're not going to tax this first basic amount. And then everything after that we'll look at. But there's a group called itemized deductions, a group of five different things like medical expenses and charitable contributions. And I've got another video on those. And what the taxpayer can do each year is they can compare those. They can bunch all five of the itemized together, add them up and see what the total is. And they can compare that to the standard. And whichever one is greater, they get to take. So they don't have to choose the lesser, they get the bigger amount. If they add up all their itemized or they don't have any, and that's less than standard, no biggie. They get to take the standard deduction. And they can switch back and forth each year. If the standard is larger this year, but itemized is larger next year, you can switch back and forth. And we'll learn later on that's actually a useful tax planning technique called bunching. Okay, so that's your first general category. Your second general category of from AGI deductions, sorry, get my pen on here, is personal exemptions. Exemptions. It's actually personal and dependency exemptions. But the weird thing about those is they're not in place right now. The code didn't take them away. The code just said for TCJA years, that was a really big set of laws passed in 2017. They went into place in 2018, the Tax Cuts and Jobs Act. Congress took away the personal and dependency exemption for 2018 through 2025. Here it is 2025, and we're waiting to see what's going to happen. In 2026, if Congress takes no action, this deduction will come back in place. So I still want you to know what it is for two reasons. One, it automatically comes back in 2026 if Congress doesn't do anything. But two, we actually use this amount later on down the road for some other stuff. So it is important that we know about it. And then the third type of from AGI deduction is called the QBI deduction. That stands for qualified business income. So this is a deduction that an individual, a person, taxpayer would take, but like it's got that name business in it, the individual taxpayer's going to own a business of some sort in order to take this deduction. So we get deeper into the QBI later on, how to do it, how to figure it out. For now, I just want you to know that it is one of the three standard deductions. So do I have to choose which one of these I want to take? No, I could take all three of these. Again, this one is for 2018 through 2025, but it's still there. It's still in the code. I choose between my standard or itemized. And then as just an employee, I wouldn't be taking the QBI deduction. I would have to have a business of some sort. We'll dig into that later on. But I could potentially take all three of these, and they all three happen after that AGI. So we find our AGI, then we list these deductions, and finally, after the last of these three happens, we get to taxable income. So another thing about this QBI deduction that throws some people off sometimes, because during TCJA years, we're really focusing more on these two since this one's out of play. Sometimes students get confused and think that the QBI deduction, you have to itemize in order to take it. And you don't. Just because it's a from AGI deduction, it's not on that list of itemized things. It is completely separate. So you could take the standard deduction and the QBI if you had a business. Totally okay. Or you can itemize and bunch it all together and take the QBI. Okay, I think that's all I want you to know about that.